Look at the money in your wallet. It's just paper. Look at the balance in your bank account. It's just a digital entry on a private server. None of it is real. We live in a world built on a collective hallucination. We believe that these numbers have value because we are told the system is stable. But what if the system was never meant to be stable? What if the global financial architecture was designed, from the very beginning, to have an expiration date? Today, we are deconstructing the entire mechanism of global wealth. From the moment money was detached from physical reality to the inevitable collapse that follows every great debt cycle. This is the story of how we built a tower of debt that reaches the clouds and why it is starting to lean. Throughout history, money was always tied to something you could touch. But a fundamental shift happened that changed the course of human history. The world moved to a fiat system, a Latin word meaning "let it be done." Money became a decree. Governments realized they could print currency without needing the gold to back it up. This allowed for infinite expansion. It allowed for wars to be funded without taxes and for empires to grow overnight. But it also birthed the debt machine. In this system, every new dollar printed is actually a loan. Every dollar comes into existence with interest attached to it. This means there is always more debt in the world than there is money to pay it back. The system is mathematically designed to fail. Why does one nation get to dictate the terms of global trade? It's called the reserve currency status. Imagine you are playing a game of Monopoly, but one player is the only one allowed to print the money and also owns all the properties. That is the position of the dominant global currency. Every country must hold this currency to buy oil, gold, and technology. This creates a global vacuum where the rest of the world works to produce real goods, while the dominant power simply prints the paper to buy them. But this power comes with a curse known as Triffin's dilemma. To keep the world running, the dominant nation must run massive deficits. They must stay in debt so the rest of the world can have liquidity. It is a suicide pact disguised as leadership. Have you ever wondered why, during a crisis, the stock market goes up while people lose their jobs? This is the Cantillon effect. When a central bank prints money, that money doesn't reach you first. It reaches the big banks and the ultra-wealthy first. They use that fresh money to buy assets, real estate, stocks, and companies before the prices go up. By the time that money trickles down to your salary, inflation has already kicked in and the price of milk and bread has doubled. The system doesn't just create money. It redistributes wealth from the bottom to the top. This is the invisible tax that the middle class pays every single day without realizing it. Beyond the banks you see on the street, there is a shadow world. Private equity firms, hedge funds, and offshore entities that manage trillions of dollars with zero transparency. These are the lenders of last resort. They use massive amounts of leverage, borrowing 10 times what they actually own to bet on the global economy. When they win, they keep the billions. When they lose, they are too big to fail, and the taxpayer is forced to bail them out. We are looking at a system where the risk is socialized, shared by everyone, but the profit is privatized, kept by a few. Finance is the new warfare. You don't need to drop bombs when you can switch off a country as access to the global payment system. We have entered an era where financial sanctions can cripple an economy overnight. By controlling the pipes through which money flows, a few powerful institutions can decide who can trade and who can eat. But this weapon has a backfire mechanism. When you use money as a weapon, other countries start looking for a different kind of money. They start looking for an exit. Inflation is often called too much money chasing too few goods, but that's a lie. Inflation is the deliberate devaluation of the currency by the people who issue it. It is the only way for a government to pay back its massive debts. If they owe $1 trillion, they make the dollar worth half as much, and suddenly the debt is easier to pay. But for you, it means your savings, your hard work, and your future are being quietly liquidated. Your bank account is a leaking bucket, and the hole is getting bigger. Every financial system in history has an arc: the rise, the maturity, and the fall. We see the same patterns repeat: massive wealth inequality, overextension of the military, debasement of the currency, and internal social unrest. We have seen this with the Romans, the Dutch, and the British. The signs are always the same. We are currently in the late stage of the current cycle. The debt has become so high that the interest payments alone are starting to cost more than the entire defense budget of major nations. The system is no longer growing. It is cannibalizing itself to stay alive. What happens when the trust is gone? We see a return to hard money and the rise of decentralized finance. Gold is being hoarded by central banks at record levels. At the same time, digital assets and blockchain technology are offering a world where money doesn't need a government to exist. This is the great decoupling. People are starting to realize that if the ship is sinking, they need a lifeboat that isn't attached to the hull. So, how does it end? It rarely ends with a clean break. It ends with a great reset, a moment where the old debts are wiped clean, the old currency is replaced by a new digital version, and the rules of the game are rewritten. But in every reset, there are winners and losers. The winners are those who own real assets, land, gold, and skills. The losers are those who trusted the paper. The global financial system is a game of musical chairs. The music is still playing, but the room is getting smaller. The question isn't whether the system will fall. History tells us it must. The only question is, what will you be holding when the music stops?